Hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly market analysis show, and this is October 11th, Monday 2021. So without wasting time, let's get into the analysis and see the price action that happened last week. Nifty formed an inside bar green candle with 3% up move from the consolidation triangle pattern with a break on the side. Right, there is another recovery bounce that happened after a small corrections. So you can see here it was a dip that happened. There is a previous week there is a kind of doji pattern with a hammer like of shadow, and then it bounced up like 5 days continuously up move. There is a dip on Wednesday. There is a big dip. Same happen, almost same happens. So it's a recovery week basically from the dip. The Bank Nifty also formed an inside bar. When you say inside bar, right, it's a weekly time frame that we're talking about. In the weekly time frame, you can see that this green candle is inside the big previous week's red candle. Right, this is also the small green candle is inside the previous week. So that's a 3% down more on the Nifty, right, inside bar. But basically, it was a recovery week. Basically, right, Bank Nifty also 1% down, 1% up. If you take it on the weekly basis, weekly candle, there's an inside bar. As I see in that. So it's kind of forming a consolidation pattern. What do you mean by consolidation patterns? On the weekly basis, you can see that there is some kind of, this, if you consider this as a pole, this is a triangular pattern, a flat kind of formation is happening. There's a consolidation that is happening. Here also you can see that there is some triangular formation of consolidation can be seen. Right? So that is what is forming. It could break out or break down. Only most likely it will break outside. And the Nifty daily candle, if you see, it's an indecisive doji candle, which is resisting at the previous resistance. Right? This is the previous resistance. It's a resistance. Here also you can see that it is near to a previous resistance. It's not the all-time high resistance, but it's a. This is Bank Nifty, right side. That is also at previous resistance. Now, it was a higher high closing that happened last week on the Bank Nifty. If you look at the daily moves wise, so if you see that Bank Nifty, you can see the closing wise. If you see, it's a higher high there, right? Every day it closed higher than the previous high. It's a higher high candle wise closing there. If you see, Nifty has dipped on Wednesday, but it quickly got recovered. You can see that. Right? It was a bounce that happened from the support zone, right? The CIP bounce, change of priority bounce, and then there is supporting divergence also right there. Right? So it bounced, moved up, big green candle of nearly 200 points, and then more. So a big dip of 200 points that happened, and then quickly next day it recovered and then bounced again. But it's both a small body and decisive body, right? So that's what is mentioned there. So the higher high close. And you can see that it is taking 20 moving average support downside. Right? So that also can be seen here. If you look at that, the Bollinger Bands, if you see, this is the 20 moving median of the Bollinger Bands. So taking support of that, right? And then it bounced and actually downside if it falls, this is going to be a very good support of 7600. Right? Similarly here, 37500 is going to be a very good support. The Bollinger Bands support. That is their downside below. And also another thing that you can notice is here, you can see that on the Nifty, there's some contraction of the volatility sign. It is tending towards a consolidation phase now. You can see that the straight up was slightly reduced in this one. Nifty also taking a consolidation route, but the volatility contraction is not visible as of now. That's what is mentioned here. Some slight contraction in the volatility bands, which may indicate a future consolidation as well. The support resistances in Nifty, you can see that 17,700 and 17,800 is going to be immediate support downside, and then that price you have 17,650 kind of 600 levels, and then that price you have 17,400 levels. The upside resistance is going to be 7,900, 7,950, and then 18,000 and 18,300. See, this is what we are talking about. Right? This is the previous resistance, which is 17,950. Above that you have a rounding number 18,000, and above that you have the Fibonacci projection 18,350. That remains the same. Actually, this is stuck at resistance. 7,950 crossing that is very critical, right? There is going to be some resistance. That means downside against this support is at this particular points, right? So 600, 700, 600, 400, all of this. Similarly, Bank Nifty also we can see, right? So the immediate resistance right now where it is stuck is 38,000. Then above that we have 38,350, 38,800, which is the projection. Fibonacci pressure, and downside you have support at 37,400 levels and 37,000 kind of levels from where it bounced previously, right? Now let's now look at the momentum in the trend analysis. The momentum is intact with Nifty, but the thing is, Bank Nifty on the short term daily time frame has not regained the bullishness. It is still resisting at the 60 RSI. So Bank Nifty has a bullish reverse divergence that is still there and is active. You can see that the bullish divergence is still there and is active. So it has moved up. You can see that, right? But that is on weekly. What we are seeing here, momentum is in. You can see that there is a price that this is the bearish divergence from the Nifty. Right? You can see that the price is going up and the momentum is coming down. So this is bearish divergence which can pull the Nifty down, right? There's a potential. It's not very much divergable if you number of bars are there. Similarly, Bank Nifty, if you see, you can see that it is having a bullish divergence which is already there previous week and it is halfway through. It almost met the target, you can see. So that is still active. You can't say it's met completely, but it's that is the scenario. But otherwise, if you see left side Bank Nifty has got momentum up on the bullish ones, but Nifty is still struggling the resisting at the say 60 levels, right? It's not gone to the climb. So there is only difference. Now trend indicator readings, if you see, there is very interesting factors on both of the indexes. On daily time frame, if you see that their momentum is intact. Weekly and monthly wise, momentum is very much intact on both indexes. But here, even after all this zigzag movements that happened last week, big tip on Wednesday, then recovery, then small body candle, all of this happened, but trend is still intact and it's rising up. It's a bullish one. Same in Nifty, trend is intact, rising up. And also you can see that this falling strength of the trend is slowly turning upwards. Here also slowly turning upwards. So that is positive. Trend is good, but momentum only has to be slightly seen as lagging in the Bank Nifty only. Right? And open interest analysis is another thing that we have to look at. If further let's look at the VIX, what happened, right? VIX had gone up to 90 levels, shooting up like big rising volume happened, but now it is at 50. That means a big 9% of down move happened last week. It's 15.65. So hopefully it is taking us up to 15 levels and then forming a range from 15 to 20 or 15 to 90, that kind of levels. But we'll have to assume we never know that. Right? But open interest analysis shows that it's a long build up in Bank Nifty and long in the futures contracts. But open interest for October options, October 14 weekly expiry, if you see, 18,000 is having the highest resistance, and above that 18,500 is having resistance, right? And 17,800 is below the support, and then below that you have a wide gap up to 17,000, which is where the next support is saying that. Put call ratios is not above 1, which is bullish. Long build up is futures option sign. The angle is 37,000, 37,700 is what support side. So conquering 38,000 is going to be a big headache, right? That is what actually is going to happen for the next week, 14th October expiry. Now weeks fall 9%, right? So there is a chance that it can always mean revert back. Right? So implied volatility is 14.7. It is above the historic volatility. Implied volatility was slightly, but the IVP has dropped from 33.44 levels to 26, which is not that great, but remains better than the very low levels that used to be there several weeks before. Open to start, this is what you're seeing, right? So you can see left is Nifty where it is having highest resistance is 7,800 levels. Okay. Right. Now sectorial watch, if you see what happened in the sectors, how do the sectors perform last week? IT sector recovered 6% up from the previous weeks of 7.5 kind of corrections. So correction is over and then recovered back. Right? Momentum also has fallen. It's time to pick up the stocks because dollar is also shooting up. So obviously it is going to be bullish release. IT is back to the bullish. FMCG corrected again further 1% last week. So bearish candle there is there. Daily momentum is also sideways. But wait for that. Stay till momentum is capture of metal. Gravestone doji. Be very cautious. Metal is forming a gravestone doji. It had shown some signs of momentum. Right? Momentum is there, but you have to be careful about this gravestone. Right? And there is a resistance on the upside. So if this gravestone doji is dangerous, stay away from until it is clear that the price moves above this doji on the metal index. For the sector, we can see that there is a 5% further up move happen. Auto is doing great, and it is kind of breaking out of a double bottom back on a weekly basis. right? Momentum is picked up and everything is well and good. So if that breakout is confirmed from the green close above that breakout zone of the W pattern, then you can start picking auto sector stocks. It may be festival week related hype that may big rise move that may be happen. Be cautious, go for short term swing trades only, just to make sure that it don't it won't the rally may not die out. So the farmers actually see that it is in the edge of the bullish momentum. It is not dropped, but it is the closing is inverted hammer. It ended in the bearish last week for the farmer. Did not rise up as expected. Its momentum is but still bullish. And cautiously get into if you see that the momentum is not dropping back again down to sideways. Right? Now the real bullish one is the reality sector. 35% move has happened now, and that will in a short period of time. Now it is moved up further 3% last week, and there is a flag breakout is happening. And in weekly, if you see that there is a cup and handle breakout pattern also. So chart wise, it is beautiful breakout that is happening, and it is going to sustain for a long time. Is what the chart says. Right? So for positional trades is where reality entry has to happen right now. Right? IT is also bullish. Those are pharma is slightly bullish, but others are all sideways and have to wait for any trades in that. Now, institutional participation, there was nearly 3,680, 3,700 crores of selling that happened for that, which is not good news. But hopefully, the domestic institutions were buying for some reason. One of the days they bought some 2,500 crores the last week. So domestic institutions at this high level also is buying units for institutions. Becoming net sell is always in that rate, 4,000 crores kind of levels. Right? That longs are surprising if you see the derivative sector also on the institutional side. Now, global markets, if you see, you can see that there is a bounce that happened in all the US indices, right? S&P 500, Drawdowns, and all that. There is a bounce. The big size is very big, which was like not ready to go down, right? The bounce is happening, is what it seems. The dollar index is strengthened and it is shooting upwards, and it is broken out earlier last week. A major resistance one, and it is trying to take out, but there is some indecisiveness before that. USD also followed the path, and the currency pair traded with nearly 1.4% of up, and 75 level got broken, right? So rupee is weakening and dollar is strengthening, even the currency pair also. And the crude oil, if you see that, you can see that crude oil is 679 near to that levels, and it is heading. This is not good for our economy at all. The prices, the oil, the fuel is shooting up. It usually impact inflation, price, everything, right? So that is a key concern along with the institutional selling. Now, Vauld, if you see, it's trying to catch up and hang on. If you see that this resistance area is where it is getting pulled down, and the dollar is rising up, Vauld is getting pushed downside, right? And just trying to hold on to that resistance. So, but very much within the channel, and it's holding a handle of a cup and handle. That is what that is. This may come down, but eventually this pattern weekly may break out in the long term basis. So, long term is medium term is trying to hang on to a major support symbol you see here. Now the stock is two of them is multi-counting. There is some news and there is some breakout that is happening. Clearly there is a consolidation box kind of rectangular pattern is happening, and the breakout is happening. If it's put this neckline of this breakout as a stop loss, and you can see if the price moves above the last candle's top, then it means you can go for a swing trade with the tight stop loss at the neckline of the breakout. Similarly, you can see RT indices from a weekly candle. You can see the huge big up move that is happening for some reasons, and this also seems to be some kind of consolidation breakout that is happening. So we have to be careful a little bit here because the move is too big. So there is a chance that there is a retracement that can come in the next week. So hold on to see whether the retracement is going not below 60, anywhere below above 60. If you see that it's trying to again consolidate on the daily candle, you can make an entry. Right, momentum trend, everything is super bullish about the stocks. Now this is the index trade that it's probably an action. You can see it's for the 14th October, the coming expiry, and then it's a hedge position on the 21st October. That's for 18,150 and 17,600 is sold, and it seems to be having good probability POP of becoming successful, and it's a reasonable profit. Right, 1:1 point. It's fine. Only will exit early with 50% of the max profit. Right, and the lot size can be as per your discretion and risk capital. So that's a wrap up. That's the analysis. So just to wrap up, you can see that actually once again a dip happened. People expected big crash is going to happen. Nothing happened. It bounced back beautifully, and then in between Wednesday, due to some reason, there was big sell, big 200 move up and big 200 move down happened. Big volatility shooting up to 19 levels, and then so there was a great week last week. It was a big week, very volatile week that happens, right? But eventually you understand that it's V-shaped recovery, buy on dips, and that is what happens. You just can't help but being cautiously bullish on this market. Remember that we are very close to a very big rounding psychological number of 18,000, and there is every likelihood that people book profit at that level, right? And there is going to be big resistance, so we are cautiously playing the vertical spreads. Diagonal spread also can work because remember the VIX has fallen down 9% last week. There is a possibility that it can again spike to 16.57 in that levels. When you spike that, double diagonal counter spreads can work beautifully. So let's take vertical spreads, not naked shots. Indirect trading choppiness will be there because VIX is at a new level, not the 10 to 11 kind of level. This is 15, 17, 18, 19 kind of level that were at peak all-time high levels on the both indices. So you have to be carefully, cautiously play the game, right? I hope it helps you to get insight on what happened last week and how we can manage to plan your trade for the next week. If you like it, hit the like button and please share it with your friends and colleagues and who you think you may benefit from. It means a lot to us. It also helps them. Thank you so much and happy trading and happy learning. Bye.